You're welcome back. Still here on Business Morning and still on that capital importation numbers that brought smiles to our faces yesterday. Now, to talk more on that is Mr. Ayode Jebo, the Managing Director of Optimus by AfriInvest, joins us virtually now to see some of the expectations from this good Mr. Ayode. Good morning, and thank you so much for your time.
Yeah, good morning. Good morning, and thanks for having me.
So I'm sure you've seen the numbers. Year on year is down, but I mean, we can live with that. I believe the more realistic one will be quarter on quarter, which we see is up. And of course, the one on equities, which for the first quarter shows about 4,400% surge. But my last guest just talked about the danger of being too excited about this since it's portfolio investment and could burst at any time.
Okay, thanks. Looking at the data, yes, rightly, it's lower on a year-on-year basis. For the quarter, we're only able to bring in capital importation about 1.1 trillion from 1.5 trillion last year. But when we look at it based on last quarter, it's higher than last quarter. But the interesting thing about this data is that portfolio investment accounts for about 58% of the total capital importation. And drilling further shows that equities increased on a quarter-on-quarter basis by about 4,400% year-on-year basis. On a quarter-on-quarter basis, and on a year-on-year basis, about 500%. So that shows that we, ahead of even the election, some of the foreign investors might have been making a call on the capital, that's on the stock market, which we can see that in the last 1 or 2 months, we've seen that appreciation in prices. In significant appreciation in prices, year to date is about, I think, 21% overall market, and banking sector, oil and gas, they are above like 60% return year to date. So what this, yes, we can say this, we call foreign portfolio investment hot money. It means they are there, they come in within a short while when there's volatility or there are major crises in the developed climes, they take the money. But they also provide liquidity. So what you would see, it's like you figure it out like the banking system, such that if you continue to provide confidence, you'll see people coming in and coming out, which provides the available liquidity for that bank. So using this as just opposing this with the capital importation. So for the FPI, yes, this is hot money. It's easy to be reversed. But if we continue to provide that confidence, I can only just imagine what would record in Q2, given what is also happening in the equities market. So you look at the total amount, about over $600 million were invested in equities last quarter. So that's the total portfolio investment, and equities was about $222 million. That's very significant. And one thing that we would also see now that is instructive is that with the adjustments in dollars, so for a potential investor as at April that is bringing in $10 million to Nigeria would have gotten about 4.4 billion naira. But with this devaluation that we have seen, it means that they have capacity to even invest more. Bringing in $10 million now will give you naira of close to about 8 billion naira. This is also one of the main reasons why we are seeing that inflow in the equities market, because based on valuation in dollar terms, our stocks are cheaper now to them in dollar terms.
So at least, if for nothing, counting one benefits from that devaluation of the naira, this will be it. But I mean, you said some things that are really important, which is we all know this is hot money. It can come in and go out. And one way of retaining and even improving the confidence of investors to change the tide would be, to win their confidence more. But how exactly? What steps should the government be taking at this time to win more confidence and turn this hot money into a more stable one?
Okay, thank you. So if we are looking for more stable investment, that would speak to FDI. And we got just a minute about $47 million, which would be like all-time high, which is very low. That's the one that leads to development, long-term, create stability. So what we need to do is provide more confidence. You spoke about insecurity earlier. There's a need for us to work on that. Those are like the quick wins. If you can do that, there will be confidence for the foreign investors to set up factories in Nigeria rather than setting it up in neighboring countries, because the demand is here. So if we're able to work on that and see more partnership between the private sector and the public sector, that will attract foreign direct investment. We've gotten as high as $4 billion in foreign direct investments if we check the past data. So what we're just seeing now is just a trickles. And you look at the equity part of the foreign direct investments, it's majorly equity. People are not looking at other forms of people investing in those companies in the long time. So it's not actually for expansion that we're seeing. So people coming in and trying to maybe buy a particular holdings in these companies. So there's a need for us to provide that enabling environment. It cannot be overemphasized. That is what will attract investment. There's no sentiment about investment. They are there for business. But if you have to provide your security, you have to provide your power. All these things accumulate such that when you look at the cost of those products, they will be significantly higher, such that their margin would be low compared to setting up in other countries. So these are the things that I think the government also needs to focus more on. And once we have that, we will begin to see more direct investment that will create stability for the economy, have more impact in the economy rather than having just portfolio investments.
Yeah, but we shouldn't forget our local investors. After all, the local investors held forth before the foreign investors thought this was a good destination. Maybe they saw the devaluation of the Naira and some other factors. So shouldn't there be, since now the Naira has been devalued, so our stocks are cheaper for the foreigners and all of that, is there any way to also encourage more of local investment?
Okay, thank you. One advantage of even devaluation, where you see in developed climes, they deliberately devalue to make their goods cheaper. So now what we can see now is that if we make our goods cheaper, then it means that we should be able to export more. There will be more demand. If they were supposed to demand for two quantity of a particular item before, it means that with the devaluation, they can demand for 4. So it is, how do we now channel to increase our exports? Are we taking care of the bottlenecks around, or the processes, simplifying it, of exporting in Nigeria? Because with the devaluation, it also puts us at an advantage over other countries.
Hello, Mr. Ibo.
Yes, can you hear me?
Okay. Yeah, I thought we lost you for a bit. So it puts us as an advantage, but the president seems very passionate, about making changes. So we've seen tax reforms, we've seen the executive order, we've seen special advisors on revenue and all of that. What do you think are a few of the steps, just in conclusion of this conversation, that he should be taking now for us to sustain this positive sentiment and even improve on it, talking about both the foreign and the local investors?
Okay, thank you. I think the next step, something that would be very impactful that we would see again, is releasing the list of ministers. That is very important. And the quality of the ministers would also make a very strong statement to both local and foreign investors. So once we also have that, with the quality of them, it would also help that we are sure that simultaneously things will be happening across different ministries, and we'll begin to see that results, because we may lose this gain if, depending on the action that is taken now, we can easily lose some of the gains that we were expecting. because some of these actions are currently causing pains. It is what we now do after that would help reduce the pains. Fuel subsidy is causing serious pain. Exchange rate devaluation is causing serious pain. What do we now do to see how we can reduce the cost and improve the standard of living of Nigeria? It is based on some of these policies that will encourage setting up of factories, attracting direct investment into the country that would help improve the standard of living, creating more jobs and reducing insecurity.
Thank you so much for your time this morning. Mr. Ayodele is the Managing Director of Optimus by Afri Invest.
Always my pleasure. Thanks for having me.